Good afternoon and welcome back to the Camarda Wealth Channel. I am your host, Troy Lerche, bringing you an update for the week ending June 4th, 2021. Last week, I had the pleasure of recording this with Rick Dwyer, and he was able to give you a little more insight into some of our indicators. He will be joining me again in the near future. We talked about the CAPE indicator, and believe it or not, it actually went up a little bit more to a little higher than 37.5 from the prior week's number. Our bull bear indicator is still, we believe, in cyclical bull territory. Counting up the number of our indicators out of our four, all four are still green, which means we are positive on the markets and deploying cash, new money, and deploying cash as we see fit. In the U.S. markets, the major U.S. indices closed moderately higher in a shortened trading week. Energy shares performed the best with the S&P 500 index as oil prices reached their highest levels in 2 years. By market cap, the S&P 500 large cap gained 0.6%, while the mid cap 400 finished the week flat, and the S&P finished up 0.8%. In international markets, international markets developed finished up the week 1.1%, while emerging markets finished up 2%. For commodities, gold had its first down week in the last five, giving up 0.7%, down to $18.92 an ounce. Likewise, silver retreated 0.4% to 27.9 per ounce. And crude oil hit all new highs for the year, with West Texas Intermediate crude rising 4.9% to 69.62 per barrel. In U.S. economic news, the number of Americans filing for first-time unemployment benefits fell below 400,000 for the first time since the coronavirus pandemic took hold more than a year ago. The Labor Department reported initial jobless claims dropped by 20,000 to 385,000 in the week ending May 29th. It was the fifth consecutive decline in initial jobless claims. The U.S. added a modest 559,000 jobs in May, falling short of the Wall Street expectations. Economists had forecasted 671,000 new jobs would be created. The unemployment rate, meanwhile, slipped in May to a pandemic low of 5.8% from 6.1%. Economists say early retirements, a lack of childcare options, lingering fear of coronavirus, and generous unemployment benefits explain why more people haven't returned to work. The bulk of new jobs created in May were by the businesses that suffered the biggest declines in employment during the pandemic. Restaurants added 186,000 new jobs last month as more Americans went out to eat. Other service-oriented businesses such as hotels, museums, parks, and entertainment venues also added scores of new jobs. However, unemployment shrank in construction and retail. Home builders still can't find enough skilled tradespeople despite the industry boom. American manufacturers have been flooded with new orders for all sorts of goods, but they are struggling to keep up amid widespread shortages of material and labor, as Rick and I discussed last week. Backlogs rose to the highest levels on record. Economists state the economy is recovering so rapidly from the coronavirus pandemic that big strains are being put into many companies, nor is demand expected to slow down anytime soon. As a measure of future activity, new orders rose to 67%, near a 17-year high. The Federal Reserve's Beige Book, a collection of anecdotal reports from each of its member banks, sees a pickup in U.S. economic growth in its latest report. In one part of the report, the St. Louis Fed noted a job fair held by a dozen restaurants to find 100 workers drew barely a dozen applicants. Some key international economic news. Across the Atlantic, Britain has clinched post-Brexit trade agreements with Norway, Iceland, and Liechtenstein as it seeks to forge new global trade relations after leaving the European Union. The main focus of Britain's post-Brexit trade policy has been to pivot its economic center away from Europe and towards fast-growing economies in the Asia-Pacific region. Finally, as COVID-19 vaccination efforts continue here in North America, how are we exactly doing relative to the rest of the world? It turns out pretty well. North America has now reached approximately 60% of its population vaccinated, followed closely by Europe at 48.5%. Surprisingly, the Asia Pacific region has one of the lowest vaccination rates in the world. Analyst reports that skepticism over the newly developed vaccine seems to be the common reason for hesitance everywhere, but even more so in Asia, where the fairly effective containment in the very early stages of the COVID-19 crisis seems to have led to a lower current sense of urgency. Africa, at less than 5% vaccinated, is reportedly stymied by a triple whammy of suspicious populations, underdeveloped distribution networks, and widespread shortages of the vaccine. Well, that's all for today. I hope you had a great weekend. Looking forward to another great week. Take care. Talk soon.